Outlet brand Tanger is doubling down on expansion with its national portfolio now reaching 40 shopping centers in 2023. The company's fourth quarter net income also jumping nearly 30% from a year ago. For more, we want to bring in Stephen Yalof, joining us here in studio, CEO of Tanger. Stephen, it's great to have you in studio with us here for the first time on our new set. Let's talk about some of the trends that you're seeing play out within the industry. We talked to guest after guest who continues to tell us that the consumer is very resilient. It's going to remain that way even in the face of extremely sticky inflation. Is that consistent with what you're seeing?
It is, and we're seeing it both at the cash register, as well as, we listen to the earnings calls of all the big brands. We have a lot of national brands and publicly traded companies that do business in our shopping centers, and their outlook seems to be pretty good for next year. So we're very optimistic about 2024 and sales.
I mean, you have a lot of that information on what the foot traffic into a lot of these different stores who operate within your retail and real estate properties that you put forward and put out there into the market. I mean, when you think about where the consumer is typically kind of going into looking for more value, looking for more deals, what are you seeing in terms of those flows as well?
The big trend coming out of the fourth quarter was apparel, particularly the family apparel brands. Brands like Gap and American Eagle and brands that sort of define the category. So that's been a pretty exciting trend for us, particularly because 50% of our portfolio stores are apparel brands. But other trends that have still remain consistent are the athletic footwear brands and the athleisure brands. And there's a lot of other athleisure brands that are getting into the fold now too, between Athleta and Vuori joining very productive and very successful Lululemon stores.
Stephen, talk to us about your expansion strategy going forward, because you guys just did something interesting here just in terms of expanding beyond the outlet strategy, which you're very much known for. Why does that make sense at this time?
It's interesting though. A lot of the retailers that are in the outlets are also in the open air lifestyle centers and the regional malls as well. We've got this ability between the platform that we've built. That's a great operator, marketers, and leasing team that can go out and execute across all those different types of portfolios. We like open air. We like the fact that people like to gather. We like the fact that there's a sense of community in our shopping centers. And we're both a local draw as well as a regional draw. We just talked about, Asheville, North Carolina, new center that we just bought. There's a great local trade in Asheville that shops that center almost as if it's its regional mall. But then again, 12 million people a year come and visit that city. So we're pretty clever in how we go after both the tourist trade and the local trade and balance both of those things.
And so how does that kind of also come back to the interest rate environment too that we're seeing right now, where it's actually more advantageous perhaps to make a purchase rather than start new construction on something?
Yeah, well, if you take a look at the 3 properties we brought online last quarter, we built one in Nashville and we purchased 2, Huntsville, Alabama and Asheville, North Carolina. Purchasing those properties was considerably less expensive than developing from ground up. Look, when we put a shovel in the ground almost 2 years ago in Nashville, it was a much different economy, a much different market. Interest rates were far lower, labor market wasn't what it was, and logistics obviously allowed us to get the products that we needed in order to put that property together. Things slowed down a little bit. Fortunately, in Nashville, rents, because the city's been booming, rents just seem to grow at the same rate that the cost of construction did, so we were able to maintain our yield.
Stephen, we just had a full screen up, a graphic showing the occupancy levels that you're seeing here at Tanger. And I bring this up because when we talk about the fact that we are in this high rate environment, the shift maybe that consumers have certainly started to show just in terms of spending more online. They're still, though, going into stores. I'm curious how that is impacting your occupancy levels and maybe how, if at all, you shifted your strategy in terms of short-term leases versus longer-term leases.
Yeah, first of all, I think that the online part of the business, obviously very critical. And I think a lot of the retailers are seeing that there's an ecosystem that where most of these retailers have an online presence, find that when they have a offline or a bricks and mortar presence, the local market does a lot more business. And when that offline store, that bricks and mortar store closes, the online business has a tendency to fall a little bit. I think the customer likes to window shop online. If they can't execute online, I think they like to execute in store, particularly in the apparel categories. And I think that's probably why we're seeing a lot of rise in that category and sales in that category.
How do you view experiential as part of the real estate kind of portion that you've got? Because that's where, I mean, and I saw a video from this weekend from a Sky Zone, I believe it was, of a future NBA prospect. And it sounds like those are the opportunities that are really going to have families really coming into some of these real estate properties, spending more time there, spending more dollars as well, whether it's a Sky Zone or a bowling alley, whatever it may be.
Sure.
Where does experiential sit with that in that?
Yeah, I think it's critically important to add that to the mix. You know, you asked about online, and I think that, you know, we're all competing to get the customer off the couch and into the store. And how do you do that? By having better food offering, by sit-down restaurants, better community space, better amenities, and also that experiential retail or the entertainment venues. We've added Dave & Buster's to a number of our centers. Tiger Woods' Pop Stroke just will accompany us in a number of centers, Nashville and Westgate in Arizona, to name a few. So between that and the outdoor driving ranges that are really hot, you know, I think people will come. Perhaps they're coming for a Pop Stroke and they'll stay for the shopping. They're coming for the shopping, they'll stay for a Pop Stroke. It keeps them out, and it keeps them out for a day and keeps everybody entertained.
All right, sign both of us up for that.
I was going to say, and the future NBA prospect,
Yes.
my 4-year-old son. But I was going to say, you made his day. Got to show him that little clip later.
I'm always elevating people's titles here. Thank you so much for taking the time here today. Stephen Yalof, great to see you.
Thanks for
Tanger
having
Outlets
me.
CEO.